Our first company is Astral, and this was down by around 3.69% today. And if I look at 1 year return, it's a negative minus 20%. And if I look at 5 year return, it is still very good return of 292%. So that's why I keep stressing on this point that minimum holding period for a company should be 5 years for that company to give you good returns. Because in short term, market moves based on sentiments, based on news and other things. But in the long terms, the earning will reflect in the share price. And this company, we all know, is the leader in the plastic product segment. And under that segment also, the major portion of its business constitute of the piping division. So it manufactures pipes and fittings for plumbing, which are used in agriculture, industries, houses, for cable protection and many other uses. And apart from its piping business, it also has business in adhesives, which contribute 23% of its revenue. And this company also recently did some acquisitions in the adhesive sector, wherein it acquired companies like Resinova and Seal. So in terms of business, this is a very good company, and its market cap is also not that high. It's just 39,000 crores. And this company in the last 10 years have provided returns like Bajaj Finance. The CAGR returns have been 46% for last 10 years. Now we are at the chart for Astral, and this company made a high at around 2600. From there it is now trading at around 1960, and it is currently down by 25% from its top. Its next immediate support is 1900. But in case if it falls further, then at every 100 rupees we have support for this company. In case we are able to find this company at 1600, then it will be an amazing opportunity to get into a market leader. But at this level also, in case you like the company and you like the business of the company, you can think of entering the company at 1900 level as well. And then if it goes further down to 1800, 17 and 16, then you can do buy on dips on this company. Right now, I understand you may not be getting any confidence to invest in these type of companies. Why? Because in the period of 1.5 years to 2 years, these companies have not provided good returns. But guys, that's what investing is all about. You need to invest in good company at good price, and right now we are getting these company at good prices. We may like these companies when they'll start touching their highs. That is when most of the people will start buying these company, but that would not be the right time to buy. The right time is now, when the company is down due to temporary reason. That is where the investing is done. You may have heard people earning multi-bagger returns and multiplying their portfolio 3x, 5x, 10x. That is all done when there is a bear market and there is a panic all across. So anyone who would have bought shares in 2020, they must be still sitting on a very good profit right now. And right now also, because of temporary reasons, global conditions, inflation issues in US, recession issues, high crude oil prices issues, because of all these temporary issues, we are getting these good companies with good business at very good discount. If you can get the courage to buy these companies right now, then there are high chances that after a few years, you will be sitting on very, very good profits. But obviously the decision is up to you. How well you can control your emotions and then invest in a company is all up to you, and is all what you gain through experience and learning. I'm just telling you what I've learned from stock market. This is absolutely not a buying recommendation from my end. You should do your own research and only buy a company once you have the conviction. Not because anyone else is saying that, not because you've seen a video on YouTube, not because your friend is telling that, not because you've heard it on a news channel. You should definitely listen to everyone and see why they are saying that, what are the facts behind it, what are the reasoning behind it, and then apply your logic, build your conviction, and then only enter into a stock. Because unless you will have a conviction on a stock, you will not be able to hold it. And holding a stock in share market is what makes you money in the long run. Next company is Avenue Supermart, which was down by around 4.75% today. And if I look at 1 year return, again in negative 16%, 5 year return, again positive 221%. So again the same thing with this company as well. This is also down due to temporary reason. It is down why? Because the expectation was not met. But if you look at the profit of the company, the sales growth of the company, it is still very, very healthy, and there is still very huge potential for this company to grow in India. So if your perspective is 5 to 10 years, this is an excellent business in my view to invest in and hold for long term. And on the expectation, you will get a reaction from the market for a short term. TCS, if you'll take as an example, has most of the time missed the market expectation. But has that company not performed in the long term? The answer obviously is a yes, that it has performed, it has given good returns. So we have to be a long-term investor and not a short-term investor that we keep selling and buying stock based on the news or expectation. We have to buy companies with good business, good fundamentals for long term. And this share is also down by around 20% from its 52-week high. From its all-time high, it is down by around 30%. So in case you have conviction on this stock, on the business of the company, you can keep focus on this share, and if it falls further, you can start accumulating. 3250 will be its very important support. If this falls to this level, then in my view it will be a fantastic opportunity to accumulate this share. So that's all in this video. We'll meet in the next video with some new information. Thank you.